Hello and welcome to this series of informative videos presented to you by Showsuite. Purchasing a new home is one of the most important decisions most households make. This series is designed to provide you with general, useful and practical tips to help you make informed decisions when purchasing a new home in Singapore. For financial prudence and consistency with how banks provide housing loans for private homes, the Monetary Authority of Singapore introduced a framework called TDSR, or in its long version, Total Debt Servicing Ratio, in June 2013. Under TDSR, when applying for a home loan, the borrower's total monthly obligations, after factoring the new monthly home loan installments, must not exceed 60% of their total monthly income. For example, if Sarah earns a monthly salary of $10,000, she can only spend $6,000 per month towards her housing loan repayments, provided she has no other obligations. What are the obligations that must be considered? The minimum monthly payment on all active credit cards and monthly installments towards repayment of her car, renovation, student loan, and any other existing bank loans. Will her other sources of income be considered? Yes, but with some adjustments. All income of variable nature like rental, bonuses, commissions, director's fees would be subjected to a haircut of 30%. This means only 70% of the variable income may be considered as part of her total income. TDSR also sets the tenure limit of the housing loan. This refers to the length of the loan's repayment plan. The maximum tenure allowed for a private home loan is 35 years. It could be lower for some borrowers depending on their age. It must be no longer than the difference of 75 and the borrower's age. So, a 45-year-old borrower's housing loan plan cannot exceed 75 minus 45, which is 30 years. But a 35-year-old borrower's maximum housing loan plan would be capped at 35 years. While banks offer differing interest rates packages, largely dependent on cost of funds, and especially for the initial years of repayment, the TDSR rules requires the monthly installments to be assessed based on a fixed notional rate of 3.5% per annum for residential properties. So let's compute TDSR and how this affects a mortgage loan application. Say hello to Sarah once again and her colleague Michael. Both of them have been looking to buy a new home each, and they have finally decided on a 3-bedroom apartment which costs $1 million. We know Sarah earns $10,000 a month. Michael too has a gross monthly income of $10,000. However, $3,000 of it is variable and only $7,000 is fixed income. For Sarah, the TDSR limit of 60% allows $6,000 to service all her loans. But for Michael, a haircut is applied to his variable income of $3,000. So that's a difference of $900 from Sarah's case. Applying the TDSR limit on this leaves Michael with $5,460 of his monthly income that can be used. Let's minus their existing loan obligations. They both pay a $1,000 monthly car loan installment and have a $1,000 credit card minimum payment. So, $6,000 minus $1,000 of car loan minus $1,000 credit card installment equals $4,000. So these are the balances of applicable income for their property loan. Assuming they both opt for a 25-year loan plan, Sarah would qualify for a loan amount of just under $800,000, while Michael would qualify for a loan amount of just under $700,000. To try this on your own, check out Showsuite's affordability calculator on showsuite.com. Now, suppose there are 2 co-owners for the property, then the TDSR computation is subject to something called an income-weighted average age. For this, the banks take the average age of the 2 borrowers, along with their respective gross incomes, to assess their loan quantum eligibility. So if Michael, who is 40 years old, makes a purchase with his wife Jennifer, who is 35 and earns a fixed salary of $8,000 per month, Then the couple's income weighted average age would look like this. For customized queries, you should speak to a mortgage specialist or banker. Do remember to check out Showsuite's other episodes, all designed to help you make the best decisions for your new home purchase. For the latest new homes offerings, visit showsuite.com, designed for you to experience your new dream home before buying it. Showsuite. New homes, anytime, anywhere.